Welcome to the deep dive. Today, we're going kind of behind the scene, in Abu Dhabi's water and electricity sector.
Oh, interesting.
Yeah, it's actually a lot more fascinating than you might think. Keeping the lights on and the water flowing, it's a lot more than just flipping a switch.
Right.
It gets into complex regulations and some serious number crunching.
Yeah, bet.
So we've got this whole stack of documents here,
Okay.
consultation papers, proposals, all sorts of stuff,
Wow.
all focused on how Abu Dhabi sets price controls for its key utility companies. And we're looking specifically at 2006 to 2009.
Okay.
So think of it like we're cracking open the vault.
I like that.
Yeah, to understand how they try to balance affordable utilities for people like you and me, right?
Mhm.
While also making sure those companies have a reason to, be efficient and keep improving things.
Right. It's a tough balance, right? Keeping costs low for the consumer, but also
Right.
making sure that the companies can, stay in business
Right,
and
yeah,
make
yeah.
investments and things.
Yeah, and what makes this even more interesting is Abu Dhabi's got this single buyer model. It's
Okay.
kind of like a central hub, right?
Mm-hmm.
That handles all the purchasing of water and electricity before it gets distributed to
Okay.
the different regions.
So instead of like a bunch of different companies all
Yeah.
competing and buying and selling.
It's like one big player
Yeah.
calling the shots.
Okay.
And that is ADWEC,
ADDX.
the Abu Dhabi Water and Electricity Company.
Okay.
So then you've got the distributors, right?
Right.
ADC for Al Ain, ADDC for Abu Dhabi itself.
Okay.
And then Transco,
Okay.
they're like the ones making sure all this water and electricity actually get where they need to go.
The delivery guys?
Yeah, basically. And of course, we can't forget
Right,
RADCO.
yeah.
The Remote Area Services Company, they handle all the stuff that's kind of off the beaten path.
Yeah, the further out
So-
places.
Exactly. So we've got these 5 companies,
Mhm.
each with a specific role.
Right.
And the regulatory body, which in the documents is just called the Bureau,
Okay.
they have to figure out this whole pricing structure
Right.
that somehow works for everybody.
Yeah.
And from what I've seen so far, it's like walking a tightrope.
Yeah. I bet there's a lot of different interests at play there.
Definitely.
The companies want to make money,
Right.
but you also want to keep prices reasonable for consumers.
Absolutely. So one of the big tools that they use is this thing called CPIX regulation.
Okay, CPIX.
Yeah. Essentially, prices are allowed to change with inflation, like most things.
Mhm.
But then there's this X factor built in.
The X factor. Sounds mysterious.
Well, it's not as mysterious as it sounds. It
Yep.
basically represents how much the Bureau expects these companies to improve their efficiency,
Okay.
to get better, to reduce their costs.
So the X is like the efficiency factor.
Exactly.
I got it.
And the idea is, as the companies find ways to do things better and cut costs,
Yeah.
some of those savings get passed on to us,
Oh, that's good.
the consumers.
Yeah.
So it's not just about covering the costs. It's
Right.
about constantly looking for ways to do things better and cheaper.
It's like they're being pushed to innovate and
Exactly.
improve.
Yeah, but how on earth does the Bureau actually figure out what's efficient,
Yeah.
for each of these things? Because they're all doing very different things.
Right. They're all very different.
Yeah, it seems kind of subjective, right?
Yeah, it seems like that would be a tough thing to measure.
Right.
Yeah. So they seem to be using a mix of different approaches.
Okay.
Like they look at historical data, how the companies have performed in the past.
Mm-hmm.
They set targets for improvement, and they even do benchmarking.
Okay.
They look at similar companies.
So they're comparing them to
Yeah.
other companies around the world.
Exactly. Like in the UK and Australia,
Oh, okay.
for example, they actually challenged Tramco's projections
Mm-hmm.
for something called stock obsolescence.
Okay.
Basically, how much of their inventory,
Right.
becomes outdated or unusable.
Yeah.
And they were urging Transco to find a more efficient way to manage their inventory.
So they're really getting into the weeds here.
Yeah.
They're not just taking the companies at their word.
They're scrutinizing the details.
Exactly. And another good example is ADDC and ADC.
Okay.
The Bureau actually pushed back on their proposed increases for what are called bad debt provisions.
Okay.
Basically, the money they set aside to cover unpaid bills.
Okay.
And the Bureau ultimately decided, nope, we're not including that in the allowed costs.
So they were really trying to keep costs down.
Oh, yeah. They're not afraid to dig deep and ask some tough questions.
It's good to know they're looking out for the consumers.
Yeah, exactly. So now this is where it gets really interesting to me, okay? Like, how do you actually calculate these price controls?
Yeah.
Is there some kind of secret formula they use?
Well, there is a formula,
Okay.
but it's not really about secrets. It's more about aligning incentives, making sure everyone's motivated to do the right thing.
Okay.
So each company has this thing called a maximum allowed revenue,
Mm-hmm.
or MAR,
MAR, okay.
and it's calculated using this formula that has like a fixed part and then some variable parts that are tied to these things called revenue drivers.
Revenue drivers. Okay, more jargon.
Yeah, but basically think of them as these specific performance indicators.
Okay.
For ADWEC, it's all about the cost of procuring the water, the electricity, and the fuel.
Okay.
For Transco, it's about peak demand and how much electricity they're actually transmitting.
Mm-hmm.
And then for ADDC and ADDC, it's about how many customers they have
Right.
and how much they're actually distributing.
Okay, so it's like each piece of the puzzle
Yeah.
represents a different part of their business.
Right.
And it all gets added up to this final revenue figure.
Exactly. But it's not just about adding things up, right?
No.
There's more to it than that.
Yeah, you're getting at something really important here. The whole formula is actually designed to encourage efficiency. So the better these companies perform,
Yeah.
the more they can potentially earn within the boundaries that are set.
It rewards them for being efficient.
Exactly. It makes a lot of sense. Now, the documents also mention this big push for 100% metering.
Yeah, I saw that too.
How does that fit into all of this?
So metering is basically individually tracking how much each customer is using.
Okay,
And it's really important for having accurate data,
got it.
especially for Transco, because in this upcoming period, their peak demand calculations are going to be based entirely on metered units.
So it's like they're trying to get a much clearer picture of what's actually being used?
Precisely.
Okay.
And this is actually where the Bureau noticed some inconsistencies.
Oh.
The distribution company's projections for how much electricity they were going to distribute were way lower than what ADWEC was forecasting for peak demand.
Okay.
So that raised questions about, how accurate their assumptions were,
Yeah.
especially since they weren't relying on full metering data.
So it sounds like there is potential for them to underestimate
Yeah.
and maybe even some conflict of interest there, since ADAC's forecasts were being used as a basis for the distribution company's calculations.
Right. It's kind of like the fox guarding the henhouse a little bit.
Yeah, a little bit. And then on top of that, the Bureau is really focused on making sure these companies are making accurate projections about their capital expenditures.
That's right.
Yeah, CapEx, the big investments in infrastructure and all that.
Big stuff.
Yeah, the big stuff. And CapEx is tricky because you're essentially trying to predict the future.
That's right. Yeah. How do you know what you're going to need 5 years from now?
Exactly. Traditionally, this CapEx stuff was regulated ex post,
Ex post.
meaning after the money had already been spent.
Okay.
But the Bureau is moving towards an ex ante approach,
Ex ante?
meaning they're trying to set allowances up front.
Okay. So they're trying to get ahead of it.
Yeah, exactly. Trying to avoid those oops, we overspent situations.
That makes a lot of sense.
Right.
Yeah. It's proactive.
And in previous periods, the companies often did exceed their provisional allowances.
Really?
Yeah, which kind of sparked some debates about whether the system was really working the way it should.
Right. So they're trying to tighten things up.
Yeah, and now the Bureau wants the distribution companies to provide these really detailed 5-year plans,
Okay.
just like Transco was already doing to increase transparency.
So more accountability all around.
Exactly. But how do they actually assess whether the proposed CapEx is efficient?
Yeah.
That seems like a huge judgment call.
Right. Because it's not just about how much money you spend.
Right.
It's about, are you spending it on the right things?
Yeah.
And are you getting the best value for your money?
Right. So for PC3, they've actually come up with this fascinating method called yardstick competition.
Yardstick competition. Okay. I'm going to need you to explain that one.
Okay, so imagine a race,
Okay.
but instead of just competing against a finish line,
Yeah.
the runners are compared against each other. So in this case, the runners are the companies.
Okay.
And the race is how efficiently they're managing their CapEx.
Okay.
So the Bureau compares them all,
Yeah.
and the most efficient company becomes the yardstick.
The benchmark.
The benchmark, exactly. So everyone else is measured against that top performer.
Oh, that's interesting.
Right.
So the best company sets the standard
Exactly.
and everyone else has to try to keep up.
And the companies that actually exceed that yardstick,
Yeah.
they might even get an allowance that's higher than what they actually spent.
Wow.
And the ones that are less efficient, they get less.
That's a really clever way to incentivize improvement.
Yeah. The goal is to push everybody towards continuous improvement.
Right.
Because ultimately, that benefits consumers.
Okay.
Because the more efficient they are,
Yeah.
the lower the costs are going to be down the line.
Exactly. It all comes back to the consumer.
Right. Now, there's another piece of this puzzle we need to talk about,
Okay.
and that is the cost of capital.
Okay.
Which is basically the return that investors expect for
Yeah.
putting their money into these companies.
Right. Because these companies need funding to
Oh, well.
operate and build new infrastructure and all that.
Exactly. They need to keep the lights on and the water flowing.
So how do they figure out what a fair return is?
Well, the Bureau primarily relies on this model called the Capital Asset Pricing Model, or CAPM.
TVM.
It factors in things like debt costs,
Mhm.
equity costs, and general market risk.
Okay, so it takes into account the overall risk of investing in these companies.
Right. And to actually get the data for this model, they've been looking at overseas markets
Okay,
because those markets are more mature.
more developed.
Yeah, more developed. So they're basically comparing Abu Dhabi to these more established markets to get a sense of what a reasonable return would be.
Okay, so they're using international benchmarks.
Exactly, but they have recognized that Abu Dhabi's own capital markets are developing,
Yeah,
and they're planning to start incorporating regional data as it becomes more reliable.
that makes sense. You want to use data that reflects the local context.
Absolutely. Now, with all this focus on costs and efficiency,
Mm-hmm.
does the Bureau have any systems in place to encourage these companies to actually excel?
Yep, sure.
To go above and beyond just meeting the bare minimum?
Yeah, like to really strive for excellence.
Exactly. That's where the Performance Incentive Scheme comes in, or PIS for short.
AIS, okay.
It's a system designed to motivate these companies to outperform
Oh, interesting.
on specific metrics.
So it's not just about avoiding penalties.
Right.
It's about being rewarded for doing a good job.
Exactly. So tell me more about this PIS. How does it work?
Okay, so they have two categories of indicators.
Okay.
Category A, which directly affects the price controls,
Okay.
and Category B, which is more about monitoring performance
Okay.
for potential adjustments down the line.
Got it. So category A is like, if you mess this up, there are immediate consequences.
Right.
And category B is more like, we're keeping an eye on you.
Yeah.
Okay, so what kind of stuff falls under category A?
So some examples of Category A indicators are things like
Okay.
submitting your audited financial statements on time,
Okay.
meeting water quality standards,
Mm-hmm.
and even the accuracy of ADWEC's peak demand forecasts.
Well, it's a pretty diverse mix
Yeah.
of targets.
Yeah, they're trying to cover all the bases.
Right, but how do they actually decide what the targets should be and
Yeah.
like how much of a reward or penalty is attached to each one?
It's definitely a balancing act.
Okay.
They want to set ambitious goals that will really drive improvement,
Right.
but they also need to make sure those goals are achievable.
Right. So how do they find that balance?
Well, they do build in some flexibility.
Okay.
Like there's this provision for what they call exceptional events.
Okay.
So if something happens that's truly outside the company's control
Mm-hmm.
and they miss a target,
Yeah.
they can try to justify it.
Okay, so it's like a safety net,
Right,
but it's not a free pass.
right. They still have to prove their case.
Exactly. And to make sure everything is on the up and up, they bring in a technical assessor for some of the indicators.
A technical assessor, who's that?
So basically, it's an independent auditor
Okay.
who verifies the data that the companies are submitting.
So another layer of checks and balances.
Exactly.
They're not messing around.
No, they're not. It's all about transparency, accuracy, and accountability.
It seems like they're really serious about their role as regulators.
Oh, yeah, they are. But it's not just about setting these targets and checking boxes, right?
Right.
They also need to make sure that the whole system is fair,
Right.
both to the companies and to the consumers who are relying on these services.
Yeah, you need to find that middle ground.
Exactly. And that's where the concept of financial adjustments comes in.
Financial adjustments.
Oh, yeah. The Bureau actually looks at past performance
Mm-hmm.
and then makes adjustments to
Uh-huh.
make sure everyone starts the new period on a level playing field.
So it's like a scorecard that carries over.
Yeah, kind of. For example, they propose some negative adjustments for Transco
Oh.
based on their economic dispatch performance and some income they had from activities they weren't actually licensed for.
Oh, so past missteps can come back to haunt them.
Yeah, a little bit.
Interesting.
They also made negative adjustments for ADC, ADDC, and Transco because of inconsistencies in their audited reports.
Really?
Yeah, from the previous period. And then ADWEC.
Oh.
Yeah, they got dinged for submitting information late.
So they're cracking down on sloppy bookkeeping.
Oh, yeah, big time. It seems like they're leaving no stone unturned.
It's good to know they're thorough.
Yeah. Now, we haven't talked much about Rasco.
Rasco, right.
What's their deal? Are they subject to the same level of scrutiny?
Well, Rasco actually presents a bit of a challenge.
Okay.
Because they operate in remote areas.
Right.
The Bureau just doesn't have enough data to do a full review for this period.
So what do they do in that situation?
So they proposed rolling forward Rasco's existing price controls
Okay.
for another 2 years.
So just kind of kicking the can down the road a bit.
Yeah, but it's understandable given the data limitations.
Right. You can't really make informed decisions without good data.
Exactly. Now, there is one area where the Bureau and the companies seem to be butting heads a bit,
Okay, I'm intrigued.
and it has to do with this thing called other income.
Other income.
Yeah.
Okay, I'm all ears. What is other income and why is it causing such a stir?
So other income refers to revenue that the companies get from things that aren't part of their core operations.
Okay.
So things like compensation from claims, penalties they receive, or gains from foreign exchange.
Okay.
And the Bureau's position is that all income should be considered
Okay.
when they're setting these price controls.
Mm-hmm.
Their argument is that the costs associated with generating that other income were probably incurred within previous periods.
So it's not just about where the money comes from, but when those costs were incurred.
Exactly.
And whether consumers have already paid for them.
Right, because you don't want consumers to be charged twice for the same thing.
Right, that makes sense. But I bet the companies aren't too thrilled about this.
You're right. Some of them, particularly ADDC, and Transco,
Okay.
are pushing back.
Yeah.
They're saying that some of this other income should be excluded.
Of course they are, because if all their income is on the table,
Yeah,
it gives the Bureau more leverage to potentially lower prices for consumers.
exactly.
So it's like a classic tug of war
It is.
between the companies trying to protect their profits and the Bureau trying to keep things affordable.
Right. And it's a tough balance to strike.
Definitely, but it sounds like the Bureau is holding firm on this point.
They are. They're emphasizing that they need a complete picture of the company's finances to make fair and accurate decisions.
Well said. All right, before we move on, let's take a moment to recap what we've learned so far.
Okay, good idea.
We've seen how this unique single buyer model works in Abu Dhabi.
Right.
We've explored the formula they use to calculate the price controls, and we've really uncovered this emphasis on efficiency, transparency, and accountability from the Bureau.
They're not messing around.
Yeah, they're serious about this stuff.
It seems like it.
And they're using these really innovative approaches like the yardstick competition and the performance incentive scheme.
Yeah, those are really interesting.
Yeah, to push these companies to constantly improve.
And we've only just scratched the surface of that whole other income debate.
Oh yeah, there's a lot more to unpack there.
Yeah, and I'm really curious to see how it all plays out.
Me too. This has been an incredibly informative deep dive into Abu Dhabi's water and electricity sector.
Yeah, it's a lot more interesting than I thought it would be.
Right.
Yeah.
But we're just getting started.
Oh, there's more.
Oh yeah, in part 2, we're going to delve even deeper into the Bureau's proposed price controls.
Okay.
And we'll explore how they might actually impact the affordability and reliability of utilities for people like you and me.
Can't wait.
Welcome back to our deep dive into Abu Dhabi's water and electricity sector. You know, we've laid the groundwork, we've talked about the whole regulatory landscape and how obsessed the Bureau is with efficiency.
Yeah, they're really all about that.
Yeah, they are. So now let's get into the nitty-gritty
Okay.
of these actual price control proposals.
All right.
What kind of numbers are we actually talking about here?
So the documents show that the Bureau is proposing some pretty big increases in the maximum allowed revenue, or MR, for these companies.
Okay.
Like we're talking over AED $4 billion by 2009.
Okay, so big numbers.
Yeah, big money.
Does that mean these companies were going to be rolling in dough?
Well, not necessarily, because remember, the Bureau is also expecting a huge jump in demand
Okay.
for both water and electricity during that same period.
Right. More people, more demand, more money coming in.
Exactly. And what's interesting is that even though the overall revenue pie is getting bigger,
Yeah.
the cost per unit for water and electricity is actually projected to go down.
Okay, so more people using more utilities.
Yeah.
But potentially paying less per unit?
Right.
It seems kind of counterintuitive.
It does. But that's the power of those efficiency improvements that we were talking about.
Right.
And it's a key part of the Bureau's whole strategy.
Okay.
They're actually projecting that unit costs are going to be 12% lower for electricity
Wow.
and a whole 27% lower for water by 2009.
Okay, those are serious reductions.
Yeah, compared to 1999.
Wow. But hold on, wouldn't that cut into the company's profits? Like, if they're selling each unit for less, how do they make up for that lost revenue?
That's where the incentive structure we talked about comes in.
Right.
You know, if the companies can become even more efficient than the Bureau's projecting,
Yeah.
they can actually offset those lower unit costs
Okay.
and still potentially increase their profitability.
So it's kind of a win-win.
Yeah, if they can pull it off.
Right. If they can actually achieve those efficiency gains, everybody benefits.
Right. The companies make more money and consumers pay less.
Exactly. But what does all this actually mean for the average person in Abu Dhabi?
Yeah.
Will they actually see their utility bills go down?
That's the million-dollar question, right?
It is.
And the documents don't give us a crystal ball,
Of course not.
but based on these projections and the trends we're seeing,
Yeah.
there's reason to be optimistic.
Okay.
Lower unit costs should, in theory, translate into lower bills for consumers.
Okay. But there are always those real-world factors
Oh, yeah.
that can throw a wrench in the works, right?
Right, like what?
Well, fuel costs are a big one, right?
Huge.
Like the Bureau's calculations are based on these fuel price forecasts. And if fuel prices suddenly spike,
Yep.
it could wipe out all those projected savings.
Right, we're all kind of at the mercy of the global energy markets.
Exactly. And who knows what's going to happen with those?
Nobody knows.
It seems like there's a lot of uncertainty built into the system.
Well, that's just the nature of the business. The
Right.
water and electricity sector is constantly evolving.
Yeah.
New technologies come along, consumption patterns change, even political events.
Right.
All that can impact costs in unpredictable ways.
So even with the most meticulous planning and regulation,
Yeah,
there's always that element of, we'll see what happens.
exactly. You can't predict everything.
Right. Regulation is an ongoing process. It's
Yeah.
constantly evolving and adaptive.
Trying to keep up with the changes.
Exactly. All right, let's shift gears a bit and go back to those revenue drivers we talked about.
Okay.
We talked about them conceptually, but I'd love to see how they actually work in practice, you know?
Yeah, some real-world examples.
Yeah, give me some concrete examples.
Right. Well, let's look at the distribution companies.
Okay.
AADC and ADDC.
Okay.
For them, it's all about customer accounts and the number of metered units they distribute.
Right.
So, for example, ABDC is projected to go from about 94,000 electricity customers in 2006 to over 102,000 by 2009.
Okay, so they're expecting some growth there.
Yeah, definitely. And at the same time, the amount of electricity they distribute is expected to jump from roughly 6,600 gigawatt hours to over 8,700 gigawatt hours.
So their allowed revenue is directly tied to how many customers they serve and how much electricity those customers use.
Exactly. The more customers they have, the more electricity they distribute, the more revenue they're allowed to earn.
It's a very direct link.
It is. And the same principle applies to ADDC.
Okay.
They're projected to go from around 205,000 electricity customers to over 218,000.
Wow.
And their electricity distribution is supposed to rise from about 14,800 gigawatt hours to over 18,900 gigawatt hours.
Okay, so they're dealing with much bigger numbers overall.
Yeah, they're a much larger company.
Right, but the same principle applies.
Exactly.
It's all tied to those real-world metrics.
Right, it's not just some arbitrary number.
Yeah, I like that they've really linked these financial calculations to what's actually happening on the ground.
It's a smart approach, and those metrics are tailored to each company's role in the whole system.
Right.
So if we look at Transco, for example,
Yeah.
their revenue drivers are focused on the peak demand and the total metered units that they transmit.
Okay, so instead of customers, they're being measured on that overall flow of electricity through their transmission system.
Exactly, and they're projected to handle a peak demand of over 5,600 megawatts by 2009.
Wow.
Up from around 4,400 megawatts in 2006.
Okay, so a significant increase.
Yeah, for sure. And their total electricity transmitted is expected to increase from about 23,400 gigawatt hours to over 31,500 gigawatt hours.
Those are some serious power surges.
They are. And it shows you that the Bureau is really incentivizing them to expand their capacity.
To keep pace with that growing demand.
Exactly. They're encouraging Transco to invest in those infrastructure upgrades
Right.
to make sure the grid can handle the future needs.
It's really fascinating, this whole dance they're doing.
Yeah.
Trying to balance pushing these companies to grow and improve while also keeping costs under control for us, the consumers.
Psychedelic.
It is, and we see that same level of detail and thoughtfulness in how they've structured the performance incentive scheme.
The PIS, right?
The PIS, right? You remember those Category A indicators?
Yeah, the ones with the direct financial consequences.
The ones that cover things like submitting your audited accounts on time
Right.
and meeting water quality standards.
Yeah, those are the important ones.
Exactly. So for PC3, the Bureau has actually laid out specific targets and incentive rates for each of these indicators.
Oh, interesting.
So, for example, all the companies are expected to submit their audited financial statements by June 30th of each year.
Okay.
And if they miss that deadline, there's a financial penalty.
Also, there's a real incentive to get their paperwork in on time.
Yeah, you better believe it. And there are similar deadlines and penalties for submitting their audited PCRs, which are due by March 31st each year.
Okay, so they're really on top of the reporting requirements.
Yeah, they want to make sure they have all the information they need to effectively monitor these companies.
It makes sense. You need good data to make good decisions.
Exactly. And it's not all about administrative stuff either.
Right.
They also have performance indicators that directly impact the quality of service that you and I get as consumers.
Okay, like what?
Well, the water quality indicator is a big one, right?
Yeah, clean water is kind of important.
It is. And the Bureau has set a target of 100% compliance with water quality regulations.
For all the companies.
For all the network water businesses.
Wow, so that means the water coming out of our taps has to meet these really strict standards.
Yeah, for purity and safety.
That's good to know.
Right. It's reassuring that they're not just focused on the bottom line.
Right, they're thinking about the consumers too.
Yeah, they're thinking about the quality of the service too.
It's a good sign.
And they're also holding AGUP accountable for the accuracy of their peak demand forecasts.
Which makes sense, considering those forecasts affect the revenue projections for the other companies.
Right. It all ties back together.
It does. They're trying to make sure everyone's working with good data and making informed decisions.
And again, it all comes back to that theme of transparency and accountability.
It's like a recurring theme throughout these documents.
It is. It's like a complex machine, all
Yeah.
these different pieces fitting together to keep the system running smoothly.
Like a well-oiled machine.
Exactly. Now, I gotta admit, I'm still a little fuzzy on that yardstick competition concept.
Yeah, it can be a bit hard to grasp.
Yeah, can you break it down for me again?
Okay, let's try a different analogy. How about this? Imagine you're a student taking a test.
Okay.
The student who gets the highest score sets the bar for the whole class.
Okay.
And let's say the teacher decides to give bonus points to students who exceed that top score.
Okay.
And students who fall short get fewer points.
Okay, I see where you're going with this.
Right. So in this case, the companies are like the students taking the test.
Mm-hmm.
And their test score is their CapEx efficiency.
Okay, so the Bureau compares all the companies.
Right.
And the most efficient one becomes the yardstick, the benchmark.
Exactly. And the companies that outperform that benchmark
Yeah.
could get an allowance that's even higher than what they actually spent,
Wow.
while the less efficient companies would get a smaller allowance.
That's really clever.
It is, right? It creates healthy competition.
Yeah.
And encourages everyone to try to be the best.
Because their financial rewards are directly tied to their performance.
Exactly. It's a brilliant way to incentivize improvement across the whole sector.
Yeah, it's like a rising tide lifts all boats kind of situation.
Exactly. But how do they actually decide which company is the most efficient?
Yeah, is there some magic formula?
Well, it's not just about plugging numbers into a formula.
Okay.
They have specific criteria they use to assess CapEx efficiency.
Okay, like what?
Well, they look at the planning process, the procurement process, and the overall management of the projects.
So it's not just about the bottom line, it's about how they're actually approaching these big projects.
Exactly. They want to see that the companies are not only spending money wisely,
Right,
but also making smart decisions about which projects to prioritize,
right.
how to manage those projects effectively,
Mm-hmm.
and how to get the best value for their investments.
So it's a much more holistic approach.
It is, and it's consistent with their whole philosophy of transparency and accountability.
Absolutely. And they've made it clear that these criteria will be applied consistently across all the companies.
Right, so it's a level playing field.
Exactly. No favoritism, no special treatment.
Everyone's held to the same standard.
But I'm curious, how did the companies actually react to these proposed changes?
Well, as you might expect, there were mixed reactions.
Okay.
Some companies, particularly the ones with a good track record of efficiency,
Yeah.
were generally supportive of the changes.
Okay.
They saw it as an opportunity to show off their good performance
Right.
and potentially benefit from the incentive schemes.
If you're already doing well, a system that rewards good performance is in your best interest.
Exactly. However, other companies, especially those who maybe haven't been as efficient in the past,
Yeah.
were a bit more hesitant.
Okay.
They were worried about the increased regulatory scrutiny,
Yeah.
the potential for financial penalties,
Right.
and just the overall complexity of all these changes.
It's understandable. Change can be scary.
It can, especially when it involves more accountability and potential financial consequences.
Right. These are businesses. Their main goal is to make money.
Exactly. So they're naturally going to resist anything that they see as a threat to their profits.
It's that classic tension we've been talking about.
Mhm.
The balance between the interests of the companies and the interests of the consumers.
Right. And the Bureau has to walk that tightrope.
They do, trying to encourage efficiency and improvement
Uh-huh.
without stifling innovation or putting too much financial pressure on the companies.
It's a tough job.
It is, and I'm sure there were some specific points of contention
Oh, yeah.
where the companies really dug in their heels.
Definitely. There were several areas where they pushed back against the Bureau's proposals.
Okay, well, this is getting really interesting. Let's dive into those points of contention
Right.
and discuss the potential long-term implications of these proposed price controls. Welcome back to the deep dive. We've been digging into this whole world of Abu Dhabi's water and electricity sector.
Yeah, it's been quite a journey.
It has, and if I'm being honest, it's way more interesting than I thought it would be.
Me too.
So we left off talking about how some of the companies were pushing back against the Bureau's proposed changes.
Right. They weren't exactly thrilled with everything.
Yeah, so let's get specific. What were some of the big sticking points?
Well, one of the biggest areas of contention was the Bureau's proposal to move towards ex-ante regulation for CapEx.
Right, setting those allowances up front instead of after the money's been spent.
Exactly. And ADDC in particular, they voiced some serious concerns about this approach.
What were they worried about?
They were worried about all that uncertainty it would introduce, like committing to these big spending projects without knowing for sure if they'd be fully compensated down the line.
So it's like, what if we spend all this money and then the rules change?
Exactly. That was a major concern for them. And they also brought up the potential impact on their valuations. you know?
Yeah.
Like, if investors are looking at a company with all this uncertainty around their returns,
Yeah.
they might be less likely to invest.
Right. Uncertainty makes investors nervous.
Yeah, for sure. So ADDC was worried that this could make it harder for them to raise capital for future projects.
Okay, so valid concerns, but did the Bureau just dismiss them?
No, not at all. They actually acknowledge that the ex-ante approach does come with some regulatory risk,
Okay.
but their argument was that some level of risk is actually necessary to incentivize efficient investment.
So it's about finding that balance, right?
Exactly. You want to encourage companies to invest, but you also want to make sure they're spending wisely.
Right. You don't want them to just throw money at every problem.
And the Bureau's position was that by being really clear about their efficiency criteria and sticking to them consistently,
Yeah.
they could mitigate some of that perceived risk.
So it's about transparency and predictability, right?
Exactly. Building trust with the companies by showing them that the rules of the game aren't going to change suddenly.
Right. We're going to be consistent here. You can trust us.
And they also pointed out that they had been talking to the companies throughout this whole review process,
Okay.
giving them plenty of opportunities to give their input and feedback.
So it was a collaborative approach, but ultimately the Bureau was in charge.
Right, they were the ones making the final decisions. But they did also mention that the companies didn't always have the best track record when it came to accurate CapEx forecasting in the past.
Oh, so maybe there was some history there.
Yeah, and that probably contributed to some of the apprehension around these proposed changes.
Right, like fool me once, shame on you, fool me twice.
Exactly. So to address those concerns, the Bureau proposed requiring those detailed 5-year planning statements.
Right, the ones Transco was already doing.
Yeah, more transparency, more detail.
Makes sense. Now, did the companies express any worries about how these price controls might impact consumers?
You know, they didn't really focus on affordability directly, but their resistance to including other income in the regulated revenue speaks volumes.
Right, because if all their income is considered regulated,
Mm-hmm.
it gives the Bureau more power to lower prices for consumers.
Exactly. And the companies, they definitely wanted to protect those revenue streams, you know.
Keep those profits coming in.
They argued that some income streams, like compensation from claims or gains from foreign exchange,
Yeah.
should be excluded from the calculations because they weren't directly related to their core business.
Okay, but the Bureau wasn't buying it.
Nope, they held their ground. They said transparency means accounting for all income when setting price controls.
And their logic was that the costs associated with generating that other income were probably already incurred
Exactly.
in previous periods.
So consumers had essentially already paid for them.
So it's like you can't charge us twice for the same thing.
Right. And the Bureau also emphasized that including all income gives them a more accurate picture of the company's financial health.
Right, which is crucial for making good regulatory decisions.
Exactly. So they were really committed to making sure the system was fair and transparent for everyone.
Well, it sounds like they had their work cut out for them.
They did. It's a huge task.
It is, with so many moving parts and competing interests.
Yeah, it's a real balancing act.
But from what we've seen, it seems like the Bureau was approaching it thoughtfully and carefully.
Yeah, they were trying to learn from the past and build a better system for the future.
Well, this has been a truly fascinating deep dive.
Yeah, I've loved a lot.
Me too. We've explored this whole complex world of Abu Dhabi's water and electricity sector.
Mhm.
We've gotten into the nitty-gritty of price control regulation.
And all the drama that comes with it.
And we've seen how the Bureau is trying to balance those competing interests of incentivizing companies and protecting consumers.
It's a tough job, but someone's got to do it.
Right. And we've seen how they're using international best practices, developing new regulatory tools, and really pushing for a system that prioritizes efficiency, transparency, and accountability.
It's impressive.
It is, but as we wrap up this deep dive, remember that regulation is an ever-evolving process.
Yeah, this is just a snapshot in time.
Exactly. So the question is, what does the future hold for Abu Dhabi's water and electricity sector?
Will the Bureau continue down this path of efficiency and transparency?
And how will it all impact the affordability and reliability of these essential services for consumers?
Those are the big questions.
They are, and that's something for all of us to think about as we watch this sector continue to evolve.
It's going to be interesting to see what happens.
It is. Thanks for joining us on this deep dive, everyone. Until next time, keep exploring, keep asking questions, and keep diving deep.